To our floor show traders, Tom Hayes and Scott Bauer. All right, gentlemen, let me start with this one. So Goldman Sachs and Wedbush upgrading Shake Shack to a buy this morning. They call the fast casual burger, shakes, and fries chain a top reopening play. But at the same time, Goldman downgrading Domino's Pizza to a hold, saying fewer consumers will rely on takeout as everybody kind of floods outside and goes to restaurants. That could likely cause a drop in same-store sales in the future. So let me start with you, Tom. What are your opening buy and sell equations?
Yeah, well, Liz, as we know, the market is a discounting mechanism, and restaurants have had a huge run anticipating this level of vaccination. Certainly, quality franchise like Shake Shack and Texas Roadhouse could push higher, but we want to look at some names where all the good news is not priced in. So we're looking at Boeing. Boeing is still down 45% from its pre-pandemic highs. We're betting on a big second-half commercial aviation recovery. Industry sources are saying that by the second half of next year, they're going to deliver 41 737 MAXs per month. Right now, their guidance for spring is only 31. So all the good news is not priced in on Boeing, in our view. Then you've got Norwegian Cruise Line, and that's an incredible story because they've just announced they're going to do their first U.S. cruise August 7th, going from Seattle to Alaska. So there's tremendous pent-up demand. Their 2022 bookings are very, very strong, but they're still down 50% from their pre-pandemic highs. And finally, we like Big Pharma. They've really lagged the general indices. We like Novartis because doctor visits have been down, and that's where scripts are written. Some drugs are administered. Novartis has a tremendous oncology portfolio. It's got Entresto, which is a heart failure drug that's up 45% year on year, and Cosentyx, which is for plaque psoriasis. So those are our three reopening plays where the good news is not fully priced in as of yet.
Okay, Scott, he gave me the reopening play. I want the equation, if you will. What do you buy, and then what do you eject from your portfolio?
All right, so I'm going to start on the ejection right now, and everyone is anticipating, a flood of retail store traffic, foot traffic. However, even before the pandemic started, retail foot traffic was on the decline. Mall traffic specifically was on the decline. I think a company like SPG Simon Property Group, I think they're going to really struggle. As the reopening happens, people just aren't going back to malls. And I just see this one, even though the stock is trading, near its highs here, I think the outlook is really, really poor for this one. And so the big mall operators, them being the largest ones, I am very bearish on them. To the upside,
well,
I'm looking at
hold on. Before you even go to the upside, I mean, I'm looking at a chart. There shows a huge recovery for Simon Property.
It does, absolutely. And I think it's time to fade it because as we reopen, Liz, again, compared to what we did prior to the pandemic, look at the foot traffic, look at retail before the pandemic, and it was on a major decline. I'm not saying that stock was. I'm saying the retail foot traffic was. I just don't see how that's going to recover as robustly as people may be thinking that it's going to. I'm looking at infrastructure. I'm looking at our supply chain disruption that we're going through right now. And I look at a company like CSX as maybe one of the companies out there that can benefit the greatest once the supply chain constraints get taken care of. And once the reopening really starts going, I love a company like CSX here. Yes, the stock is trading near all-time highs. Their PE ratio has doubled in the last year as their market cap has risen from like $44 to $75 billion. I think this stock breaks out to all-time highs here and it really has a lot of room to run on the upside. And my last one, Liz, is one that you and I both love, using the equipment. However, I know you and I have discussed this before, and I'm looking at Peloton. Even with the outrageous PE ratio, if you will, or the market cap that they have right now, I don't love it as much as a few weeks ago when they had the treadmill issues. But remember, they bought Precor. Precor is the largest fitness equipment company out there that was in fitness centers. Peloton's taken them over. Peloton's going to be in every fitness center out there, and I love this stock.
Yeah, they're in hotels and condos now, and John Oliver knows because he's made fun of me for bringing up Peloton, but I love my Peloton, John. Tom, Scott, great to have you both. Thank you very much on this very busy Tuesday.